My name is John Ason, and oops, where does there it is. So let me give you a little background. I started at AT&T Bell Laboratories. I did 25 years there. I did 10 years of bleeding edge technology work. Then I did marketing and business management for selling large telecommunication systems overseas, primarily the Far East and Brazil. So that's my background. I'm a technology person. Most VCs and angels are financial type people. I made money in the stock market, so I quit. Okay, since then, I've done 50 companies. Okay, because of my technology background, the two companies that are the most famous that I founded are diapers.com and bikini.com. Diapers.com, we sell diapers on the internet. People used to make fun of me because I sold diapers on the internet. Then we sold a company to Amazon for $545 million. Those people aren't laughing at me anymore. With bikini.com, this company does exactly what you think it does. I invested in this company when I was going through my midlife crisis. Okay, so here are some of my 50 companies. I'm a female-friendly investor. 11 of my companies were started by women. 2 of the companies have 2 women founders. 6 of the women founders are foreign-born. One of these women was born in Kyiv. Her name's Anna, and she started Off Track Planet, edgy travel site. Some other companies, like Libris, one of my earliest companies, is an internet book publisher. Started in 1996. I have a company called Spling, which organizes rich media on the internet. It is a 453 company. 4 of the founders are 19 years or younger. They've done 5 startups. They've exited 5 startups successfully, and they got 3 years of total college between them. Another company I have is Kaluna. It's a vineyard. Started in 2005. We make French-style Bordeaux in Sonoma in the Russian River. And I have Happy Couple, which was founded by an Indian woman. 2 months after funding, we were in 104 countries. A great accomplishment, and we don't know how he did it. He just went viral. Okay, what I'm going to do now is go into a little more hyper speed. My presentation is designed for about an hour. I was told I only have half an hour, and I was also told to focus on how to get funding from an angel investor. So I'm going to go warp speed. I'm only cover the big important topics. Okay, angel investing in the U.S. typically. Let's say up to about 4 years ago, the typical round was 275,000. Right now, the average round is around 650,000. So the amount has gone up primarily because there's micro VCs have entered the market and are supplementing what angels are doing. Our profile, we're usually private. I'm one of the few that is publicly known, and people can access me rather easily. Okay. And what is it that we want? We are not financial animals. Money is not the object that we are doing angel investing for. It's basically a pleasant experience and watching the company grow, unlike VCs who are complete financial animals. Okay, our exit strategies, if you've been to the presentation from the GetJar founder, the most common exit for an angel is a merger or a buyout. Very few get into IPO. I've never had an IPO. The closest I got was diapers.com. All of the exits I've had have been through mergers and acquisitions. The other thing is, for angels, 60% of our companies go under to zero. 30% are really no exits. So 90% of our companies fail. For us to stay in business, we need to have the 10th one return 10 times our investment. So your company has to show that's how to get to 10 times our initial investment to be eligible for angel investing. Hey, how do you find angels? Just got to network. There's no list of angels, you just have to network. There's a little secret about angels. They're like cockroaches. If you find one, you're bound to find others. We always travel in packs. Okay, now what is that we want to see? a short, focused presentation. In my case, I only accept one-page executive-level summaries, and it's one-sided, okay? If you do me anything other than a one page, I will not accept it. Okay, and if you're negotiating with angels, it has to be a pleasant win-win situation. I've been doing this for 17 years. I know the ins and outs of the 50 companies and a lot of negotiations. This is probably your first and only negotiations. So I could really take advantage of you. So unless it's a fair transaction and you feel it's a fair transaction, you should not enter into it. I mentioned returns, 10 baggers we're looking for, and that roughly corresponds to about a 50% internal rate of return. Our company culture, the most important part I want to see in a startup is speed. More speed and more speed. And by speed, I mean the ability to make a decision. I want you to make a good decision with minimal or no data in an hour. I don't want you spending 6 weeks getting all the data, all the research, and then coming back with the perfect answer or the perfect result. So I want you to make good decisions on very short order. You make a bad decision, fine. We move on to the next one, but it's the quickness which is the key to a startup's success. And the other thing I want you to do is compete and cooperate. So what I want you to do is give me a list of your competitive people, the big companies that can wipe you out, okay? So then what I tell you is, I want you to take your business plan and send it to them. In many cases, this will freak out people, okay? You want to give them your business plan because they are the most likely candidate to merge you out or to buy you out. They're in the field, they know the value you're creating, they know the speed that you're working, they can't compete with you. You're smarter, you're quicker, you're more nimble. You compete with them, they're afraid of you, you should not be afraid of them. Okay, just a quickie about angels and VCs. VCs are managing other people's money. Angels invest their own money. So angels can invest in anything. VCs are limited in investing in quality companies. They have legal responsibilities, fiduciary responsibilities, so they actually invest in a very different manner. But the key is, it's not their money, they're fiduciaries. Okay, now here's the important part. So how do I evaluate a proposal? And to give you a background, I get about 3,000 a year. So that's about 10 a day. I spend 1 minute per proposal. So you get 1 minute to convince me to take a call or have a meeting with you. Okay, so the first thing I do is I see that it's a clear, concise, compatible, coherent presentation. Okay, I want to see a large potential, and by that I mean I got to see a 10 times return on my initial investment. It has to be intellectually stimulating because I'm not going to invest in a boring company or boring people. So it's got to be stimulating for me. I have a choice of who I invest in, and I only invest in intelligent, smart, exciting people. Okay? Yeah, I want to see the marketing skills, and I want to see that you're able to execute, do things. Okay, now let's just quickly talk about the exploding market. The major shift that has occurred was about 4 or 5 years ago when AngelList came on site. Before AngelList, I would do 1 to 1.5 investments per year. Finding a company was a big problem. Once I found a company, getting assembling a syndicate of angels was very difficult. So the most I could do was 1 to 1.5. When AngelList came in about 4 years ago, they had 3,500 companies listed. All of a sudden, I had a surplus of companies to look at. So instead of going 1 to 1.5, the first year AngelList was that I did 5. Next year, I did 9. Okay, so it dramatically increased my ability to do angel investing. Then the accelerators came on, and now they're producing large numbers of quality, fundable companies that speak my language and can talk to me and to talk to VCs. So the number of companies that are available is just mind-blowing. This is angel heaven for me. And now, the last 2 years, there's been a dramatic uptick in international activity. like example, this conference right now. And this is worldwide. Mexico City, we had 8,000 people show up. I was in Minsk last year, Vilnius, Oviedo, Spain. So there's a dramatic uptake in our spread of angel companies, startup companies throughout the world. Okay. So we talked about this. I talked about that already. Okay, now here's the good part, okay? So how do you seduce an angel investor? Okay, now if you come here, you're going to meet a lot of VCs. And I went to one of the panels today, and I saw VCs. I think the smallest one I saw was 300 million, okay? I don't think they do many seed stage companies. So if you ask those VCs, what is it that you want to see? They're going to get things like, here's the business plan, I want to see your IRR, you want to see your marketing plan, your strategic, and so forth. So when you talk to one, you get a good list, and you say, wow, this is the smartest VC I ever met. Very penetrating questions. You go to the next one, and you're going to get a slightly different story. You go to the third one, a different story. When you get to the fourth one, it's going to be conflicting. And all of a sudden you're saying, wait a minute, what am I supposed to do? Don't they know what they really want? And the answer is not really. So then when you start to fill out or you get that information assembled to send them your business plan and so forth, you find out one other thing. You can't do it. You're stuck. Okay, and here's the basic reason. The information they're giving you is wrong. They're giving information for expansion capital or funding an existing functioning company. That's the business they're in. They're not taking your side. That's the world they know. They're giving you the information they know. And the reason is the following. At the early seed stage company, you have very little data. Okay? If you're going to be disrupting a market, you don't know how the market's going to turn out. If you're creating a new market, you don't know what this market's going to look like. You don't know what the characteristics of this market. You have no customers. You have no revenues. You're just out of college. You have no experience. You've got nothing. Okay, so that's a typical early seed stage company versus an expansion company. So most VCs and angels you're going to meet are further down the line. So the question is, how does an early seed stage company get money? Okay? Let's talk about that. The first thing I want to see is an explicit statement of what you do. About 30 to 40% of the stuff I get does not include an explicit statement of what you do. And this has been constant for the last 17 years, this number. I want to see what you do, not what you enable, not what your customers can do, not what you enable your customers to do. I don't want to see the problem you're solving. I want to see explicitly what you do. And for a lot of people, it's impossible. They cannot tell you what they do. They can only tell you lists of features, lists of things they do, but they can't tell you what they do. So that, and I want to see that within the first sentence or two. Okay?
Hey, Thomas. I'm going to introduce
then
you.
Then I want to see a rationale for the market.
If we have
I don't want to
time,
see numbers,
finish early,
spreadsheets. I just want to say,
afterward.
why do you
If
think this
don't have
market
any time,
exists?
then
Why
I'll
do you
just
think
move
you
on to
can
the next
penetrate
speaker.
this
So
market?
it's very flexible.
What
Up
is
to you.
this market? Tell me about it.
Yeah.
It's the rationale I'm looking for. I'm not looking for the specific numbers.
Whatever you
I'm
would
not
like.
into
So you tell me
spreadsheets.
what I'd like, and I'm very flexible.
Hey.
So up to you.
And in the market forecast, I want to see a bottom-up approach.
No, usually
Tell
I
me
go
your
afterward
customers
to
are the
TA
first 6
lounge
months.
or side. If we
Who are,
want to
which
ask them
customers
questions,
are on your
we can be
pipeline
very
for the next
flexible.
6 months?
I'm
Who are you
not
going to be
rigid,
approaching
so whatever
for
is comfortable
customers
for you,
in a year
I work
from
around
now?
your desires.
So give me a bottom-up. That we can check, verify with those actual customers. So you do a bottom-up forecast. Then I want to see quality management.
Okay, that's fine. Whatever's good for you.
Failures are okay.
And if you're flexible in
fact,
the middle of
they're
it, you call me
pluses.
up.
You've learned
and
something.
I do whatever. So
We know
no
you've learned
worries.
something, okay?
Okay,
And you're at it again. Means initiative and so forth. For us, a failure is good. It is not a negative. And then in the early seed stage, we prefer people outside industry. VCs will tell you, well, you got to know industry experience. Well, if you're going to disrupt this industry, create a new market, guess what? You need to be from outside the industry. I, as an angel investor, unlike VCs and most other angels, I only invest in industries I know nothing about. Okay? So for disrupting industries, you need to be outside. Okay? And here's the bottom line. What you're selling an angel is equity in the company. You're not selling him the product or service. People think they're selling me the product or service and are focusing on the product or service. I'm not a customer of your product or service. I'm a customer of equity in your company. Show me how you're going to make money. That's what I'm interested in, okay? So let's talk about the first encounter. Okay, the first thing when you meet an angel, or and maybe even a VC, what is it that you need to accomplish with your meeting or with your one-page executive level summary? There are three things. First thing you need to do is entertain. You have to be interesting. You have to provide a reason why the person wants to have a relationship with you, a business relationship. So that's important. The next thing you want to do is you need to impress the angel or the investor. And the last thing you want to do is do a inform or a product, a description of the service or product that you're providing. That's the least important part. So you want to entertain and impress. If you come up on stage and say, you're going to sell diapers on the internet, people are going to laugh at you and pull you off the stage. But if you impress the audience and you impress them very highly, they're going to say, yeah, maybe you can sell diapers on the internet. And they may believe you, and they may fund you. And maybe you'll sell out to Amazon for $455 million or $545 million. Okay, so it's the impress part that's very important. And remember, first impressions, you can only make it once. If you don't do it the first time, it's tough to make it the second time, okay? Okay, so how do you do that? Okay, typically one of my responses to people who send me proposals, my common response is eliminate 90% of the words. Okay, that's one of my common responses to proposals that just keep flying in. So what you want to do is you want to do less words. So if you're doing a presentation, you don't want a screen full of words. Because the people are going to be reading the words, they're going to be trying to analyze the words, and their mind's there, you're talking, you're competing with yourself. Okay, so that's bad. Okay, less words. You want less data. Again, same thing. You don't want to show spreadsheets of 400 numbers. For example, if you're going to do revenues of 300 million in year 5, you don't want a spreadsheet with 4 numbers and you point out to that little 500 and saying, look, I'm going to do 300 million in year 5. What you want to do is take that 300 million and cover the whole sheet with it. 300 million. Okay? That's what you're going to do. And that's what you want the audience to know, absorb, and think about. You want more pictures. Reason for pictures is that pictures you can absorb in milliseconds. Then you can pay attention to what the speaker is saying. Pictures are very important. Okay? You also want more action. There's 2 aspects of action. One is if you can describe with pictures stuff what your company does. That's very easy to understand, very powerful. The other is what I call the umbrella effect. If you come to me and you say, here's the problem I'm solving, and guess what? My company's going to solve this problem. Okay, this seems to be a very constricting way of describing what you're going to do. So what I'm going to try to do is generalize your solution. Make it a platform, or saying, this is what we do. The first application is this, and the second application. But you do it in general. By doing it in general, you expand the scope of what your company can do. So I do not like problems stated. A lot of VCs will tell you, well, we want a problem. We want to know what problem you're solving. you should have your problem that you're solving should be implicit in the description of what you do. If you do it right and do a platform of some sort, then the VC will say, hey, did you think about C? Can you do C? And you go, yeah, we thought about it. Yes, we can do C. Then he goes, well, can you apply that to the advertising agency? And so, well, I didn't think about that. How do you do that? And guess what? Now you've got the VC or angel coming in with suggestions, ideas, and so forth. If it's done well, the VC and angel is going to see a much bigger company than what you present.
Pronouncing your last name, Chekowitz.
And if they see a bigger company than you present,
okay,
you
good.
should get funding.
New York.
Okay, because now
New York
they're
City.
adding value to you
US,
by
New York.
exploring additional capabilities, additional problems that your company can solve.
Russian, Polish.
Okay?
My background's Russian.
And the bottom line of all those previous things is you want to sell it on emotion. It's not data-driven because you don't have any data. Okay? So here's mine. You can send me any one-pagers. I'll be happy to look at them because I spend 1 minute on it, and I'll give you comments if you want to. Everything I talked about is on my website, johnason.com. I'm also writing an ebook, and because I'm a socially responsible investor, 100% of the profits go to charity. The charity happens to be my daughter, Jessica. Thank you.
Thank you very much.